Welcome back to the Forma AI Podcast, where we explore how visionary entrepreneurs are leveraging strategic thinking and cutting edge technology to solve critical business problems and drive scalable growth. Today, we have a truly fascinating guest who will reimagine how private capital markets operate. Joining us is Jeremy Neilson, the founder and CEO of Sally, a fintech SaaS platform that's automating the creation and management of SPVs, which is special purpose vehicles. These are used for investment deals. Jeremy previously built one of the largest SPV providers in the US through Assure, launching over 9,000 SPVs. Now, with Sally, he's taking a completely different approach, building what he calls automated self-governing software that eliminates the need for humans running around behind the scenes. Jeremy, welcome to the show.
Thank you. Thank you. Glad to be here.
Amazing. Let's start with the big picture, Jeremy. You built Assure into one of the largest SPV providers in the country. You've launched over 9,000 SPVs. It's a massive achievement. Then you walked away from that model to build Sally, which you described as a paradigm shift. What was broken about the Assure model and what made you decide to start from scratch with Sally?
Yeah. Well, Assure had what I call an Assure virus. And what that was just a poor or a business model that had an issue. The business model was the issue with the Assure business model was there was far too much manual work. And what we discovered, so we had a business model that we envisioned that would be successful, that would be usable for many, many years. We then worked on that model. We then tried to tweak that model. We tried to introduce technology into the business. And what happened was we created technology that was not very good. Inferior is the word I'm looking for. So it was inferior with lots of different issues. So the issues really were that it wasn't complete. It wasn't all the features and functions and modules needed to run SPVs. And you would think, well, that's normal, right? Like you build some software and you don't add every feature and then you add some more and you add some more. And that's the way we approached it. You're right. Release early, iterate, move fast, break things, right? Like, so we were kind of doing those types of those things. But what ultimately happened and what the issue is with that model with SPVs is that SPVs and investing has a long life. And so you do a SPV, you launch it, you close, but you have another, let's say 5 to 10 years of ongoing stuff. That would be corporate actions, that'll be taxes, that'll be membership transfers, distributions, and a few other things. And so it's not like, so SPVs and this SPV software, it's not like I don't know, like software that where you can take photos and edit them or post on social or help create a social post or something like that has a very small short life cycle, right? Like you take the video, you edit it, you post it, it's over. And if there's a new feature that comes later, then that's great. In the SPV world, it's like you post that social post, but then you have maintenance on that post for 10 years. So, drive it back to the Assure issue was when you have poor software, you are creating more and more extra work for yourself that lives on for many years and you can't like stop it. You can't like create some software that then like stops that manual work, that off-platform work. And so what happened was is we built some software thinking, oh, this will help us do things more efficiently. But because it wasn't complete, it actually doubled and tripled our work. And how to describe that was on platform, we did, let's say 70, 80, 90% of the work, but there was a small piece that was off platform. That would be like side letters or a change of documents or a fixing of money movement or, different things like that. And now I have on platform source of truth and I have off platform source of truth. And so now I have to have a third platform or process or spreadsheet that then combines those two. So now I have a third element. And then it comes time to do taxes, and now I have to like recreate and remember, and it just became arduous. It became too heavy, and our business basically tipped over, right? It was just too much extra work, too much manual, too much on and off platform, not enough places of sources of truth. And so you either do it manually, all of it manually, or you do it with great software, but the in between just doesn't work. So that was the impetus of shutting Assure down and then kind of starting over, if you will.
It's a bold move, essentially saying the thing I built successfully doesn't work long term, so I'm going to build the future instead. You mentioned that Sally is automated self-governing software, where the platform does all the work without humans supplementing it off platform. Can you walk us through what that actually means? What does true automation look like in the world of SPV creation and management?
Yeah. So there's tons and tons of steps and tasks and little nuances. So I've broken up an SPV into 19 core tasks, but inside each one of those could be kind of hundreds of little steps or nuances. And so kind of going through a couple of those would be document generation. When I say my document generation would be every SPV has specificity, the name, area, minimum, some different things, right? And so having technology that, you basically put in a little bit of information and then behind the scenes, a little Sally magic, right? Creates the documents, populates the documents, pulls all the information from all these different places and puts it into the document. And to step back a little bit and kind of go back to the Assure story, which is what if your system isn't sophisticated enough to cover the majority of the use cases around what information needs to be in those documents, what type of structures that our clients set up. So again, with Sally, it's really building a robust infrastructure and architecture is really the foundation. I mean, another automation that is very difficult to deal with would be money movement. So people send in money. And how do you like reconcile that? How do you tell them that the money received? How does the system know that the money received? So building some automation and some features around recognizing those funds, automatically reconciling, automatically sending off emails or notifications to investors that the funds have arrived. That's a huge lift. And maybe a final example would be fixing documents. When I say fixing documents, investors many times will send in the wrong amount. Maybe it's the bank took out a few dollars. Maybe they changed their mind. Maybe they forgot. Maybe whatever reason, right? And then how do you get the documents to change? And so with Sally, we created more Sally Magic automation where the system just automatically fixes documents and makes sure everything matches so that there's not this in platform original versus off platform actual. And so just make sure everything stays in platform. And then there's kind of 100 other little steps or features that we've added that automate this, that, or the other thing.
Jeremy, one of the things that struck me in our pre-podcast call was when you said you purposefully built Sally to be a little more futuristic than perhaps the users are expecting or comfortable with. That's a very fascinating strategic choice. Most founders try to meet the market where it is at currently. You're essentially betting that the market will catch up to your vision. Why did you make that choice? And what are the risks and rewards of being ahead of that curve?
Yeah. Well, I've seen the market move. My history is that I created this fast moving, affordable, simple SPV. And so I've seen how the markets move from the original. People were mailing us in hand signed documents. They were mailing us actual written checks, and so there's this progression of fintech technology that's out there, the use of mobile phones, people's comfort in providing their information. And so the future is continuing on, regardless of the flows and processes and products that SPV administrators provide. That's one thing, right? That it's going to go there regardless. If we want it or not, it's going to continue to improve, change, and move down the path. The other reason for me to maybe create next gen SPV software rather than just next gen is because I've seen what and I've experienced what kind of a manual tech-enabled professional services firm looks like and acts like, and I don't want to recreate that because I know of how much manual work and labor. It's just not a good business. It's not a good business to build. And so instead of just taking one step away from the Assure model, I wanted to take five and kind of wait for the market to come to me because I've seen it. Like I mentioned, I've been in this for 15 years. I've seen it walk down that path and I can see the movement towards me. So instead of like jumping right at the beginning of the train, if you will, and then needing to change and kind of keep up and change and keep up and change, I decided to just kind of go down the road a little bit, set up my lemonade stand a little bit further down and wait for them to come because I believe that's a better business model. That's a better long term solution, and it'll be a much more smooth experience both for the users and for the business.
Fantastic, Jeremy. Thank you for that. You also mentioned that you expect year three to be when things really take up. That's a long game in a world where most startups are chasing rapid growth from day one. What gives you the confidence to play that long game? And what needs to happen between now and year three for that inflection point?
Yeah, so SPVs are a bit of a slow burn. So there's really no ability to do a rapid growth. And why is that? Our clients have to do multiple things for them to use your software or to use your service. They need to do due diligence on you and select your service or your software. They then need to go out and find deals, and then they have to find investors. So there's kind of this long tail. And so there's really no ability to say, I've got the world's greatest and everyone signs up tomorrow and we take off with an exponential curve. And so being kind of wise about the actuals and the realities of how SPVs work, how clients change, switch over, hire, and use your services. And also, again, like we talked about a moment ago, I'm purposefully a little bit further down the road. And so there is perhaps a smaller group of people that as of today want what I have. And so if I do that correctly and I sign up those people that are looking for what I have and fine tune and iterate and tweak and improve the software. By the time the larger group approaches, the system will be a lot more stable, a lot more, you know, used it a lot more, and have that kind of solidification to it that you need with software. And so, what needs to happen for kind of that year three for me? I need to continue to be out and talking about it. I also need to find those kind of early beta customers, and I just need to continue to make the software as solid as I'm telling people it is. And it's amazing. It is solid. It works. It works really well, which comes from all those 9,000 SPVs that we built, but also just adding a couple more of those features and fine tuning it so that when the masses show up, you've had all those use cases, you've added all those little tweaks. And when people say, does it have? You're like, yes, it does. And here it is. And it's been used 100 times and works really well.
I'd like to talk a bit more about the competitive landscape. We're going up against established players like AngelList and Carter, who have massive brand recognition and resources. How do you position Sally differently? Is it purely the automation angle, or is it something deeper about how you're thinking about the future of private capital?
Yeah. So let's talk about AngelList. AngelList has a great product for those people that fit in their box. AngelList has a narrow box, and that if you don't fit their box, they're not the right group for you. AngelList has great software. They've been working on it forever. We actually were a big part of that software when we ran all of their SPVs for 7 years through Assure. And so we just know that they do a great job with the product that they have. but I continually get people reaching out and saying, AngelList says no to my deals. AngelList product, it's not what I want. So AngelList has a very specific product to marketplace to meet certain people's needs, and they do a great job. Um, if you, the way I look at it, if AngelList is perfect for you, you should probably go with AngelList. And so I'm not really feeling like I've got a competition with AngelList. Carta is not really interested in the SPV space. They do a great job with ledgers. They do a great job with the e-shares part of it. They do a great job with traditional venture funds on the traditional venture fund admin space. Um, but Carta is not interested, and they've been very clear about it, to do fast, affordable SPVs. So if somebody is using Carta on fund administration and they need to do an occasional SPV, Carta is the right solution for them. If you're on Carta and you want to do an SPV a month, they're probably not the right solution for you. Uh, And so, and then there's other players out there that, again, most of them are pretty narrow in their offering. And that's because they have humans running around doing the work. And when you have humans running around doing the work, you have a very heavy, high labor cost. And so you want to make sure that the output or the workload is very predictable. Like, we only do these two things, we only allow these three things, so that we know that we only have to do these 5 tasks. And so really poor technology usually equals very narrow offerings. And so you can see that in the so-called competitors. I do know I compete with them when people evaluate SPV services, but I'm software. So they're admin, they're professional services, I'm software. And when I get the chance to explain that to people, it makes sense. And so I just need to continue to beat that drum and help clarify what Sally is and isn't, and how it fits in the market.
Thank you, Jeremy. Really appreciate that. The private investing space is undergoing massive transformation right now. We're seeing the rise of angel syndicates, platform-driven investments, and also more accessibility for accredited investors. From your vantage point, having been in this space for so many years, what are the biggest trends shaping the future of SPV investing and private capital formation?
I'd say the biggest trend is the comfort and the enjoyability-ness. That's not a word, I just made it up. The enjoyableness of using or investing in SPVs. So what do I mean by that? The investors, what's happening in the marketplace is investors are liking more and more their ability to select the investments that their money goes into. When you go into traditional venture fund, which has its place and is awesome in many ways, is blind pool. So you commit money and you are saying, I hope you do a great job, right? I believe in you, and I don't know what you're going to find. I don't know what you're going to invest in, but I believe in you, right? That's great. Nothing wrong with that. But there is also another option, which is SPVs, which is, do you want some shares of whatever it is, OpenAI, right? So as an example, I've got some shares. Do you want some? And investors are like, yes, I do. And this is super exciting. And I get to be part of the selection process. And so as I see this trend and the movement is just the fact that investors are getting more and more comfortable, that they're becoming more ubiquitous, and they get the chance to participate in the building of their portfolio. It doesn't mean that they don't also go into traditional blind pool venture funds. A lot of venture funds are now providing drop down SPVs so that their LPs can participate alongside in either non portfolio deals or portfolio deals with extra allocation. And kind of the connectivity or the relationship between LP and venture capitalists and private equity groups is becoming tighter, in my opinion. Maybe the GPs don't like it, but the LPs are saying, how do I get closer? How do I get to participate? And so just that comfort and ubiquitousness of SPVs, I believe, is what's really driving the trend forward for people to be more investing, more interested in doing more deals.
Pivoting into challenges in the space, One of the biggest challenges is regulatory compliance. Private investing has to navigate securities law, investor accreditation rules, and complex legal structures across jurisdictions. How does Sally handle compliance, and how do you balance automation with the need for legal precision and regulatory adherence?
One of the great things about SPVs is they're more simple. When you look at a large venture fund, they're going to have large complexities and they're going to have to deal with the different regulatory bodies. And that's basically what they're there for. SPVs can be far more simple. And that's one of the attractiveness. It's why they're attractive for fund managers, for syndicators, for different groups is because they don't have to have as large of regulatory burden. There is still a burden there, but SPVs, because they're self-contained, because they're simple, it's easier to comply. So Sally has functionality built in, some automation, some self-governing around security filings. It does KYC AML automatically, generates reports. It can create outputs. And so when you have an SPV that has all the features and functions and is that source of truth and collects all the information, it's really easy to spit out a package, a spreadsheet, information that makes compliance easy. When you do a venture fund, which is far more complex, that has capital calls, multiple portfolio companies, blind pool, there's just a lot going on. You need a lot of work to track everything, organize everything, report on everything. Everything's kind of always in flux, always moving. And so it can feel far more complex because you're never really settled, where an SPV can just be done, settled, closed, buttoned up. Now you have what you need to report and submit. And so there's just there's a lower regulatory burden at times, but also there can be an easier reporting from an SPV rather than a larger venture fund.
You mentioned in one of our previous calls, you're trying to figure out how AI can be used wisely in Sally, specifically identifying which features and modules would actually benefit from AI versus the ones that don't. That's a very refreshingly nuanced take in a world where everyone's just throwing AI at everything. Can you elaborate on that? Where does AI fit in Sally? And also, where does it not?
Where would AI fit in Sally would be in what I consider them kind of edge or ancillary or post close or pre close activities, specifically reporting. I've spent a lot of years trying to figure out how to provide great reporting to my customers. And it's very difficult when you have humans or before AI, computers trying to read these long legal documents. And so I'm super excited about AI to stuff in purchase agreements and various documents and say, find me XYZ and report it this way. Amazing, wonderful use cases. Taxes can be another one where you're pushing in information and having it help populate or evaluate things around tax returns. I also see a very meaningful way of providing some sort of agent that allows people to ask questions, to get education, to get videos, to get guidance right throughout the platform, because SPVs do have an element, although they're much simpler than any other structure. There's an element of if I go left or right or can't remember, A or B. And so I can see AI being very impactful on that post-close reporting, post-close compliance and filings, and kind of guidance around the system. Where I don't see it as impactful is kind of what the core or kernel of SPVs, which is legal accounting compliance inside that deal that you're launching. And to be more specific, when you have the legalities of an SPV, yes, AI can help with legalities, but they're specific. They're specific to your deal and they need to know from your brain what is it you want to do. And so you put in that information. When it comes to investors investing, they already have a structure set up. AI could tell them what structure to set up, but you still go and set that up. And now you need to input that in specifically. What are your numbers? What are your digits? What is your address? What did you select? And so all these things around money movement, profiles, data, documents, all this stuff is very specific. And so we're asking you to input that, and then we're using it appropriately across the different aspects and elements and documents inside the system. And so I don't see AI helping somebody put in their information. It may help them make a decision before they invest, but there's kind of a core kernel, not really, it doesn't add a lot of substance to you or help you a lot when it comes to using some sort of AI in those steps.
Mr. Jeremy, looking ahead, what's your vision for Sally over the next 3 to 5 years? If everything goes according to plan, what will the platform look like and how has it changed the way private capital markets operate?
Over the next 3 to 5 years, I envision kind of the herd, if you will, to become far more aware that you can use software to do SPVs, that there's a lot more automation, there's a lot more features and functions that give you a lot more freedom and optionality without adding team cost, slowing things down. In fact, it can improve or speed things up. The ecosystem today has tried to narrow the optionality because you have so many humans doing the work. So, like I mentioned earlier, humans are awesome, right? But they then cause you to have high overhead and you don't want a lot of variability. And the software that I've built with Sally, it's now re expanding the optionality, the functionality. And so people will get the chance to kind of open up, let their wings out, if you will, and they can have a lot more optionality and functionality. And Sally will just continue to add more of those features as we have more users, as we have more use cases. I'm excited for the users to guide features like, it'd be great if we could have, or know what I'd like if you could build. And that's really exciting for me because I have the experience of 9,000 SPVs that I know what the 80, 90% of an SPV is and what it needs to be and have. I'm excited to kind of partner, if you will, with clients to create those features and functions that is on their side, that's on their brain that I don't have. I have the SPV world, but it'd be great to continue to talk with clients and add those extra things that they maybe even secretly haven't even voiced yet because they don't think that it's possible. And I've had that over my experience, my career with SPVs, with Assure, and just providing these amazing features and functions and services and products allow my customers to then like, whoa, if that's possible, then maybe we could, or maybe this is possible. And that's the exciting part of building amazing.
Jeremy, I've got one last question for you. What's something that we need to talk about that we haven't talked about yet?
Let's talk about secondaries or liquidity. It's kind of a sneaky little thing that's going on right now in SPVs. It's a little bit of a quiet conversation that people aren't talking about kind of openly, right? We talk about amongst ourselves. And that is SPVs provide a liquidity option that people that do SPVs know about, but the broader ecosystem may not. We've heard lots of groups kind of try to create these secondary marketplaces and whatnot. And SPVs provide this amazing option to trade or sell your position without replacing on the cap table, without replacing somebody on a seat, without maybe getting permission, if you will, from the CEO. So if an SPV sits on the cap table of a startup company and that company gets very popular and people come in and say, I want to buy your position, you can sell that SPV without replacing the SPV. So the owners, if you will, everybody, let's say use a car as an example, right? All the passengers in that car exit and new passengers come in. But as the CEO looks, it's the same car. It's the same entity or vehicle that sits on their cap table. And you can also do it inside the car. So let's say the person sitting in the middle in the back seat wants out. Well, you can swap that person without disrupting the SPV, without disrupting the entity, without messing with their position on the cap table. So SPVs provide this amazing liquidity, kind of secondary optionality that people are using. I've seen it for many, many years. Saw it at Assure, see it today. And so it's happening right now. It's just kind of a quiet thing, not said. And with Sally, again, you can just automate this, right? Just click some buttons, sign some documents, and whoop, somebody's been traded out, right? And so right now it's pretty manual for the other groups. Sally allows it to be automated and smooth and easy and almost instantaneous.
Jeremy, thank you so much for sharing your invaluable insights. It's been incredibly enlightening to learn from you. The way you're thinking about the automation, the long game, and building for the future rather than just the present is truly inspiring. I can't wait to see where Sally is in year 3 and when that inflection point is. Like, I'd love to catch up in the future to hear how it's going. Really
That'd be
appreciate
great.
this. Great. So, what did you think?
Thanks. No, it was great. I appreciate that. That was enjoyable. Great questions. That was super. I liked it.
Amazing, amazing. I think the audience is really going to get so much value from your insights, especially on the importance of building the future and not just replicating what exists. I loved the lemonade stand analogy.
Yeah. Thanks.
Yeah. Jeremy, just two things before we go. I wanted to ask if you know any other people who would be interested in jumping onto a podcast. You don't have to answer now, just someone you can chat, like think about, and then you can send me an email later on. Then I'll put you on the spot.
Sounds good.
Yeah.
And what do you like? Like, who do you like? What would be a profile of someone that's really interesting to you?
So very similar to you, someone who's thinking about the future and trying to tackle those problems head on rather than trying to put their lemonade stand at one station and then trying to constantly pivot.
Okay.
Someone that you respect.
All right. I'll keep the eyes and ears open.
Amazing, Jeremy. And obviously, like, if you ever need some help with lead generation, we'd always be there looking to help. So obviously, like your focus is on Sally. So if you want us to like help you get customers into your pipeline and then you pitch Sally to them, do your thing, we'd be happy to help.
Okay. We'll keep that in mind. Thank you.
Yeah, no problem, Jeremy. It was lovely chatting with you. I hope you have a great day.
Thank you.
Bye bye.
See ya.